The first thing I would encourage people to evaluate providers on is to get back to that sort of binary or uncompensated risk question. Is the security design of the fund adequate to meet your needs? Do they have processes in place to evaluate coins from a regulatory perspective to screen out regulatory risks? Are they considering the liquidity of the coins, et cetera? Because this is a market that emerged from the grassroots to where it is today. And it's not like the traditional equity market. So even in something, we run a very simple strategy, right? We run a crypto index fund. That's like the S&P 500. But I can tell you the amount of diligence we have to do in this space compared to a traditional equity fund is significantly higher at the index level. I edited the Journal of Indexes for 10 years. I'm an index geek through and through. And this is a complex ecosystem, even to do an index strategy. But beyond those binary risks, then you have to talk about sector exposures. You and I know, and many investors don't know, that different crypto assets are going after completely different markets. And maybe not completely different, but very different markets. And so you have to decide which of those markets you think are most interesting. And then once you decide that, and that could be broad-based, it could be Bitcoin only in the digital store of gold, it could be DeFi, it could be Web 3.0, there are multiple spaces. Then you have to decide active versus passive. Crypto likes to talk about everything being new. It's really the same thing. It's just different things are more emphasized. Product structuring, more complex, security and other risks. But then you get down to active and passive and sector exposure, and it's actually very similar. And there are lots of sectors that I find very exciting in the space.